The US, the red there is obviously the problem. That was what they call the Arctic vortex, when essentially you closed down New York. And so it's quite a large fall. So it was minus 0.8 in GDP. So it had the same sort of effect. If you think back to the Queensland floods, it had about a minus 0.8 effect. If you look through some of the survey data on the right-hand side, what you see is that big spike down in the Fed surveys, and you also see it a little bit in the ISM, which is their major manufacturing survey. But if you look through it, what you tend to see is things have come back. So there was a lot of debates in economics about, was the US really weather, or was it something else? I think the answer is it was something else. And when you look forward, a lot of lines on this graph, but basically what we're seeing is domestic demand. The green line there is essentially residential investment. So that's slowed a bit, again, weather, but as we go forward, increasing. Consumers still strong, business investment's quite strong, and down the bottom there, the sort of impact of the government tightening is becoming less. So in a very fundamental sense, the domestic part of the US economy is growing currently at around 2 to 3%. And when you're in that sort of world, which by the way is about twice as fast as what Australia's domestic economy is growing, you get a very big fall in unemployment. And so what the Fed has been saying is it looks at this story and says, well, we've had some weather problems, but the economy's okay, unemployment's coming down, at some stage soon we're going to have to stop printing money. And what they've been doing is they started off at 80 billion printing money per month, and they're down to about 20. And by about October, if these things continue, they'll be finished. And so one of the big issues as you go forward is, when do you think, I'll put up a technical graph, but basically if you're looking at that sort of aqua sort of colour line, that's just a technical graph about where you should be seeing interest rates. So we're expecting interest rates to start going up around about the middle of next year. And the market's got a similar sort of view. That's going to be important. The reason it's going to be important is when you put up rates, people are going to say, okay, I'll put more money back into the US. And there'll be countries like Indonesia, etc., and some of the developed world or developing world that will be very nervous that the money's going to leave them. And therefore you'll get disruption effects in currencies and equity markets. So a lot of the focus when they talk to Janet Yellen is, when is she going to start increasing rates? And if unemployment keeps falling, which it's down around about 6% now, then soon they're going to be sending messages that I'm going to be increasing rates. The timing is very difficult, but as I said, our assumption is finish the printing money by about October, and then basically start increasing rates by the middle of next year. The last general comment I put up in the global economy is, if you use quantitative easings, you do have big effects. So left-hand side there is just, if you go back to where the currency, the Australian dollar against the yen and the US dollar against the yen were 12 to 18 months ago when Abe started his printing money and spending money, what you see is essentially a strengthening of the Australian dollar, the US dollar against the yen. People worried about the equity markets in Australia being strong, which is the blue and the green line, Australia, the US. Look what the Japanese equity market did. So you've had this massive sugar hit. But once you get beyond that, there's not a lot there. So my sort of overview, if you just come back to it, there's a lot of charts there, but basically the world is coming down, the US is coming back, Euro sort of flat, Japan, it's okay, but sort of fuzzling out. And then finally, in areas like non-Japan Asia, it's really, so the Koreas, there's Singapores, the Hong Kongs, they're growing at around about 3%. They're not doing great. Global trade is not wonderful. Latin America is terrible, and India is underperforming. So there's lots of sort of differences according to where you are. Added up, the big picture though is that the global economy starts to come back, but that's mainly as the US comes back and as Europe, you hope, comes back a bit as well.